Hi everybody, Anthony Fletcher here. Thank you for joining my video. Today we're going to be talking about some things I think you should know that's not normal part of the loan routine that a lot of people talk about. First of all, we're going to start with things that you should do. And the first one is talk to your lender on a regular basis. You and your lender should be feeling like you're driving a car going the same direction. You should be talking on a regular basis, at least weekly. Or if there's many other things that just happen, they should be talking to you so that you're not kept in the dark. Same thing, you should not be keeping your lender in the dark either. Second thing, save your money. Go ahead and continue to just save your money as you're normally doing, as you're putting money into your account. Just make sure that that way, then when the lender pulls up a new bank statement, that they can just see the money continue to roll and keep going forward. That will really help as far as making the lender know that you're just keeping the status quo and no issues. Third thing is go ahead and continue to make your house payments, any rental payments, any car payments, or anything like you need to do. You don't want to those things to lapse. Those can actually trigger what they call a credit alert, and then if the lender pulls a new credit report and affects the credit score, we have an issue. Continue to gather documentation. The lender generally creates what they do is they look at getting your 2 years worth of W-2s, 2 years of tax returns, 2 months of bank statements, and 2 pay stubs to qualify for your loan. Continue to, and when the next month goes by, continue to get another month's worth of bank statements, pay stubs ready to go. So if the lender asks for them, you're ready to go. Keep working. Don't take leave of absence or anything like that. Just keep working. And you want to just be the most status quo person, boring person out there. Go to work regular basis, things like that. It's only going to take about a month to get your loan closed. So put any major vacations or anything like that on hiatus until after the loan closes. Next one, focus on the transaction procedures. And what I mean by that is that everybody has a part and a role in getting your loan done. The realtor has the part of getting the house sold. The lender has the part of getting your loan done. The title company has the part of making sure all the documentation is accurate and everything like that, with it having to do with the title transfer of the property. So there's a lot of questions you might have. Just make sure that you have those questions. Make sure you ask somebody about them. There's no dumb questions out there, and everybody should be available for you so that if they don't know the answer, they can direct you to the right person that can give you the answer. Okay, let's look at the stuff that you shouldn't be doing. The first one is you don't want to do any construction while you're in the process of doing a refinance. That happens mostly on the refinance. If an appraiser comes out to the property and there's an issue where, let's say, the bathroom is completely ripped out, it's going to affect the appraisal and may affect the actual loan. So you want to keep the house together until after the appraisal is completed. Second thing, don't use credit. Don't go out there and buy new credit items with your appliances or anything like that, because what can happen there is it can affect your credit score again. Next, don't change jobs. A lot of times what people do is they go and they're going to take a new job. Generally wait till after your loan closes to start working at your new job, unless you've gotten the approval from the lender. Sorry. The lender can actually ask the underwriter, and the underwriter can go ahead and give you the thumbs up and ask for any documentation that you might need. And if you can provide that documentation, it's usually not an issue. But just don't do it without telling anybody. Next, don't get divorced. I've had a case where somebody's gone and came to me for a loan. They wanted to get the loan without the husband on. Then the husband went to go buy another house, and then halfway through my transaction, I went to go out and pull the title report, and the title report showed that they were getting a divorce, and there was a lien on the property. That stopped the transaction right then and there. Husband couldn't go buy his house. She couldn't refinance her house. It was dead until after the divorce was completed. So don't get divorced during the transaction. Don't let your ID lapse. It goes without saying. Don't make any large bank deposits unless you've talked to your lender first. A lot of times when you're commingling sorry about that, documentation for a closing, sometimes what you can do is if you transfer a bunch of money in one account when it was in another account, it looks like you're money laundering. So you don't want to do that. What you do want to do is just make sure that you show the lender the bank statement here, show the lender the bank statement here, and where the money is, and that once the loan has been given final approval, then you can make the transfer. Finally, don't buy anything like we talked about. Don't buy any cars or anything like that that you shouldn't be buying, because it can affect the debt to income ratio and can make an issue for you closing or having enough money to close, or even being able to get the loan altogether. So if you're thinking about buying anything, talk to your lender first and get their approval. All right, everybody, thanks for joining for my video. I sure appreciate it. Thanks for watching my channel. Hopefully I'll see you again, and don't forget to push the like button. Thank you.